Welcome back to another market review. Let's get straight into it. So as we can see, we kind of had a big, or not kind of, we had a big overnight sell-off, but we failed to really manipulate above true day open. So we have this true day open right here, and we really failed to manipulate above it, and we just end up tearing off. Notice that there's been a large pricing lower overnight, and we were failing to make it to premium arrays, such as this imbalance here. And when we do make it to those premium arrays, we are respecting 25%, and we're really respecting these premium arrays. So this tells me that we're failing to come up to this array right here. We're failing to come up in a consequent encroachment even of this array, and we keep on doing that. That shows the bearish tone of the market here. So we continuing to respect these premium arrays, continue to sell off. We are very weak, and as we can see, 8:30 on ES, we had cleaner action on ES in my opinion. At ES, we manipulate above 8:30 opening price. We then form SMT with NQ at that time within a 15-minute imbalance right here. Then we had a higher 5-minute SIBI that we actually traded into that we reclaimed, and we end up displacing lower. And then we kind of end up having we have high resistance liquidity signatures today, high resistance liquidity conditions today. Today had some tough market conditions, and that's going to be something to note today, that today's conditions weren't as clean as I would like them to be. So therefore, if I can spot these conditions when they're likely to form, such as today, and not engage in them, then I feel like that is success. That is success as a trader in my opinion. Avoiding the days when I'm likely going to mess up, I'm likely going to burn mental capital, I'm likely not going to feel comfortable within that position. And if I do enter a position, if I am in that position, knowing that I should probably cut it here. So as you see, we had a 15-minute immediate rebalance on ES. We had these 15-minute up close candles right here that we end up drawing into, and then we displaced lower, and we'll get into that. We end up forming a lower day right at that new day opening gap. So pretty nice. And then here we leave a breakaway gap right there. And then the PM session was not very much. We were consolidating. So when can we likely expect to see consolidation? When we've done this. We've done this much movement on the day. We're likely not going to prime us up to do much. And then this is a daily order block right here, I believe. Daily order block level. And then this green is an imbalance level, 1 hour imbalance. So here is the 1 minute chart on ES. So as you can see, we end up sweeping buy side, then we take in buy side again, and then we have an SMT. So at this moment of time, ES does not need to go higher at all. ES does not need to go higher. Although we are in a deep discount, yes, ES does not need to go higher. We have liquidity that rests within here, within these swings right here. A lot of traders are retail traders are chasing this. Notice how we opened here. We draw higher within the first 30 or so minutes. And this gray box right here is the opening range gap. So where we closed on Friday to where we opened up today, this is the opening range gap. As you see, this right here is a 25% mark. Again, we are failing to reach up into premium arrays, and when we are coming up into premium arrays, we are respecting 25%. So what does that mean? We're underlying weak. We are weak. So we're failing to displace above. We have this SMT. We have buy side taken here, buy side taken here within a 5-minute imbalance. We originally have this fair value gap right here, and then we inverse that, and we end up displacing lower. So this body right here, inversion, and boom, we displace lower. And this becomes a breaker. We might have, actually I didn't annotate that, but I think we traded into the body here. Again there. I want to see a retracement up into this fair value gap right here. End up being an institutional order flow entry drill on the higher time frames, like the 5-minute. And we'll get into that. But as you can see, we have a volume imbalance right here. Once this gets respected, once a volume imbalance gets respected, I've been noting that and I've been backtesting that. But volume imbalances, they're key. If they get respected, then that shows you the intention within the market. We're respecting this volume imbalance, and we end up repricing lower. This is a 1 hour fair value gap on ES, and notice how we're kind of just consolidating within this. So therefore, I wouldn't view this as a reversal. I wouldn't view this imbalance as an area to reverse off of. And here we have this imbalance right here, and I'm denoting also the 950 macro. 950 macro, we end up having a reversal. We trade away from this. This blue is the new week opening gap. Once we trade away from that, that's keying up that we're likely going to head lower. All right, and then, oops. Let's get into the other charts that I have. This is NQ on the 5-minute. We're consolidating. I don't care to be in part of these market conditions, and I'm glad that I didn't trade today. That's kind of what I'm denoting here. But we distribute away from new day opening gap here. We fail to reach into a new day opening gap. Institutional order flow entry drill lowers the liquidity signature. We have an imbalance here, and we continue to sell off. Low the day at a new week opening gap. That's what I'm marking here. All right, and here's ES. Most of my annotations today are on ES because I thought ES was a little bit cleaner. This is the PM session. This is the whole PM session. What are we within? We're within a consolidation. So when we're within a consolidation, we're going to go from deep discount to deep premium. This is that original dealing range here. And in consolidations, we're going to favor turtle soups back to equilibrium of the range. In high probability turtle soups or come from, we take a dealing range high or in a dealing range low. As you see, we take this high, head back to equilibrium of this range. Notice how new day opening gap keeps on getting referred to. New day opening gap keeps on getting referred to. New day opening gap keeps on getting referred to. 130 opening price also is pretty much at equilibrium of this dealing range high to low. And also notice that we're going from deep discount to deep premium, back to equilibrium, to deep premium, to equilibrium, to deep premium, to deep discount here. So here we have low resistance liquidity signature. We have this trend line right here. Market on close macro, and then that 350 macro ends up coming into the deep premium. We have this rejection block right there. And then this is actually constant encroachment, or it would be equilibrium of this dealing range portion right here. Come to that, also within this inversion, and we end up repricing to this low resistance liquidity right here. And we end up putting a low day like right at that. That is perfect. That is perfect to the tick precision right there, right at that previous new day opening gap. And we end up closing back within the range. This is something that I would note, and conditions too likely you would like to avoid, and I would like to avoid these. So the more bad conditions that we can avoid, the better. And why did that happen? We just sold off insanely, and this is the daily profile. We had 930 or 950. We came up into IRL here, internal range liquidity, taking buy side here. We had buy side the risk above that. We end up displacing lower and then consolidating throughout the rest of the day to market close. And here is the 3-minute chart here. We have an institutional order flow entry drill, and we come into that breaker right here. And also notice why we have an institutional order flow entry drill, because we have this inversion right here. So we're going to come into that. It's going to be very sensitive because we are weak. We're very weak. And right there, then we reprice lower. So yeah, that was pretty much the day. And I do want to note one thing before I end this, is the fact that dollar displaced lower today. Dollar had a down day today. YM actually had an update today. And ES and NQ both had displacement legs. And NQ was actually pretty weak, was very underlying weak. The fact that this candle doesn't have a body or doesn't have a wick, this could be, for me, a candidate to maybe be an order block on the right side of the curve if we want to do that. But just the fact that we sold off this much, ES was underlying not as weak. YM, we had an up close day, and then DXY, we actually had a down day into my draw on liquidity that I was submitting to here, my draw on liquidity. DXY could possibly reverse here, could potentially reverse here. So, or we could continue to head lower, So I'm going to be monitoring what we're going to do within the next 3 days, because I think that might tell. This could just be an artificial move lower, or this could be a start to repricing to these lows, this imbalance. I wouldn't say maybe this imbalance, and then maybe we find these order blocks here, this order block here, and maybe this is sell side of the curve. But for now, I'm still submitting to a higher time frame bias, unless if we don't find support at this candle here. But anyways, that's all I have for today. I appreciate you. I'll see you guys in the next one.